viewers, welcome back to my channel. In this video, a problem is solved on preparation of hire purchase accounts in the books of hire purchaser. Kindly watch the video till the end, like it, share and subscribe the channel. If you have any comments about the video, put your comments in the comment box. The question is like this. Mr. Sunil acquired a vehicle from Moped Limited on hire purchase system on 1/1/2010 payable rupees 1000 down and the balance as under rupees 1300 at the end of the first year, rupees 1200 at the end of the second year, rupees 1100 at the end of the third year. Interest is charged at 10% per annum, rate of depreciation at 20% on the diminishing balance method. Ascertain the cash price and prepare necessary ledger accounts. Now let's move to the whiteboard. In this problem, we have not provided with the cash price of the asset, and the agreement is signed on 1/1/2000 between Sunil and Moped Limited here. Rate of interest is given as 10%, rate of depreciation is given as 20%. So first we need to ascertain the cash price, then we have to prepare the necessary accounts in the books of hire purchaser here. Here the necessary accounts means vehicle account and vendors account, very importantly, then interest account and depreciation account here. So now let us start here. Ascertainment of cash price of vehicle, cash price of vehicle here. So here date, column, then installment. This is a very simple problem here. Installment, then interest, at the rate of 10% per annum. Then CP, then depreciation at the rate of 20%, it is given here, 20% per annum. So now we need to go backward method of calculation here. So the agreement is signed on 1/1/2010. The down payment is also paid on 1/1/2010 itself. So there are three installments, that is 2010, 11, 12 here. So from the last installment, that is 31/12/2012, 1100 is the installment. So 1100 into 10 divided by 110, so that comes to rupees 100. So 1000 is the cash price here. Then the second installment, it is due on 31/12/2011. The installment here, it is 1200. So 1200, so 1200 plus 1000, that comes to 2200. So 2200 into 10 divided by 110, so it comes to 200 rupees. So when we subtract this 200 from 1200, we are going to arrive rupees 1000 here. Then So 31st of 12 2010, the first installment it is 1300. So 1300, here 1300 plus the previous two we should take, that is 1000 plus 1000. So when you take the total here, it is 3300 into 10 divided by 110. That comes to 300 here. So when this 300 is subtracted from 1300, we are going to arrive rupees 1000 here. So the down payment is paid on 1/1/2010. It is paid rupees 1000 here, on which no interest is payable. So here also 1000. Now let us do the totaling here. So it is a 4000 here. So 4000. Then now let us take the total of this here. So 600 here. Then let's do the totaling here in the installment column. 3 plus 2, 5 plus 1, 6, so 600. 1 plus 1, 2, 2 plus 1, 3, 3 plus 1, 4. 4600. You can also check it out. 4600 minus 600 will get 4000. So which we are going to arrive here, cash price rupees 4000. So now we should allow the depreciation here. So 4000 first year. So the rate of depreciation already I have written here, it is 20%. So 20% of rupees 4000, which comes to rupees 800. So when the difference here is 3200. Then second year, 20% of 3200, which comes to 640. So let's find the difference here. 60, carry on, 12 minus 7, 5 here, 2560. Third year, again we should calculate here, that is 20% of the same, that is a 2560. So 20% of 2560, it will come rupees 512. 10 minus 2, 8, carry 1, 6 minus 2, 4, 5 minus 5, 0. So 2048. This is what we are going to arrive at rupees, the outstanding balance of the asset at the end of the fourth year. So now we need to prepare the accounts here. So let us go for preparing the accounts. This is a very simple problem here. So once if you are very much perfect in preparing the hire purchase chart, actually there is no problem here. So the here it is, the hire purchaser is Mr. Sunil. So in the books of Mr. Sunil, who is the hire purchaser, vehicle account, here it is debit, so credit. So date here, date, then particulars, then journal folio, then rupees. Then date, then particulars, and this is rupees journal particulars. So now let's start the preparation of vehicle account in the books of hire purchaser here. So on 1/1/2010, so when the down payment becomes due for payment, then it will be vehicle account debit to hire vendor. So who is the hire vendor here? Moped Limited. So Moped Limited 1000. Then the first installment becomes due on 31/12/2010, then it will be vehicle account debit, interest account debit to Moped Limited. So we should take only the principal part here, that's all. So now let's do the balancing here. So 2000 rupees on 31/12/2010, when the depreciation becomes due for payment, then it will be depreciation account debit to vehicle account. So vehicle account is credited by depreciation. So the first year depreciation here is only 800. So now let's do the balancing here. By balance carried down. So here it is 2000 is the balance. So 2000, 1200 is the difference here. So this is brought on 1/1/11. So 2 balance brought down 1200. Then on 31/12/2011, when the second installment is due for payment, then the entry will be vehicle account debit, interest account debit, 2 vendors. So here is the vendor Moped. So 2 Moped here. So 2 Moped Limited. So again the principal sum as we calculated in the hire purchase, it is 1000. So 2200 on 31/12/2011. When the depreciation is allowed, then it will be depreciation account debit to vehicle account. So vehicle account is credited by depreciation. In the hire purchase chart, we have calculated depreciation as rupees 640 rupees. So on the same day, let's balance here. So by balance carry down. So we have come here the balance 2200. So 2200, when you take the difference here, 6 plus 4 10, 7 plus 5 12, carry 1, so 1560 rupees. So on 1/1/2012, this is brought down, so 2 balance brought down here. So it is 1560. On 31/12/2012, the last installment becomes due for payment. Then the journal entry is vehicle account debit, interest account debit to Moped. So to Moped here. Again we should take only the principal part, that is 1000. So now let us take the total here, 2560. On 31st of 12, 2012, when the depreciation is allowed, again the same entry remains here. That is depreciation account debit to vehicle account. So vehicle account is credited by depreciation. So by depreciation, 512, which we have calculated in the higher purchase chart. On the same day, let's balance here. So by balance carry down. So 2560, 2 plus 8, 10, 1 plus 1, 2, 2 plus 4, 0 here. So 2048. The same balance which we have in the higher purchase also. So on 1/1/2013, so let us write down here 2 balance brought down. So that is 2048. So this is how the vehicle account is prepared in the books of a hire purchaser. Now let us go for preparing the hire vendors account in the books of a hire purchaser here. That is also very simple here. So if you understand the preparation of a hire purchase chart, you do not find any difficulty while preparing the accounts here. So now let us go for preparing the hire vendors account in the books of hire purchaser. Let me take a few seconds to run this here. So let us go for preparing the hire vendors account. So hire vendors are nothing but here Moped Company Limited. So Moped Limited's account. So the down payment becomes due on 1/1/2010. Then the entry will be vehicle account debit to Moped Limited. So Moped Limited is credited by vehicle account. So vehicle account, so which is given as rupees 1000 here as the down payment. On the same day, that is on 1/1/10, when this is paid, then the entry will be Moped Limited account debit to bank account. So which is given as rupees 1000 here. So the first installment, it becomes due on 31/12/2010. Then the entry will be vehicle account debit, interest account debit to Moped Limited. So Moped Limited credited by vehicle rupees 1000. Then interest, the first installment it is 1300. So by interest, so you have to look at the last in case of the higher purchase chart where we have got this 300 as the interest. So when you take the sum of this here, it will be 2300. So on 31/12/2010, when the first installment is paid, then the entry will be Moped Limited account debit to bank account. So to bank account here, 1300. So when you take up the sum of this here, it will be 2300. Then the second installment, it becomes due on 31/12/2011. Then the entry will be vehicle account debit, interest account debit to Moped Limited. So Moped Limited is credited by vehicle account. That is rupees 1000. Then on the same day, interest, by interest it is 200. So when the second installment is paid on 31/12/2011, then the entry Moped Limited account debit to bank account here. So Moped Limited is debited with bank account. So the second installment paid is 1200. So when you take the total here, it will be 1200 here. then here it is 1200. Then the final installment becomes due on 31st 12 2012. Then the entry will be vehicle account debit, interest account debit to Moped Limited. So Moped Limited is credited by vehicle account, that is 1000 rupees. Then interest by interest, so 100 rupees. So it is 1100. Then the final installment is paid on 31st of 12 2012. So the last installment it is 1100. When it is paid, Moped Limited account debit to bank account. So bank account it is 1100. So here the total will be 1100. So this is how we should prepare the vendor's account in the books of hire purchaser. The question here is to prepare the necessary ledger accounts. So then we should prepare interest account. So let me take, let me run this here. It takes few seconds here. So preparation of interest account is very easy. Just how many installments will there, that much of entries will, postings will come here, that's all. Let me show you how it can be prepared. In the same fashion, we should also prepare the depreciation account also. And this depreciation and interest, these are the nothing but the expenses to the hire purchaser, which will be debited to his general P&L account, that's all, or P&L account simply. So now let us go for preparing interest account. So interest account. So on the 31st 12 2010, when the interest is due, interest account debit to Moped Limited. So interest here is 300. At the end of the year, that is on 31st 12 2010, when this is transferred to the profit and loss account, then the entry will be profit and loss account debit to interest account. So interest account is credited by P&L account. So 300. So it is balanced here. There is no balance remaining in this account. Similarly, for the second year, that is on 31st 12 2011, when the interest is due, interest account debit to Moped. So to Moped Limited here. This is when it is due here. Then 200. So 200 here. Then when it is transferred at the end of the second year, that is on 31st 12 2011, then the entry will be profit and loss account debit to interest account. So interest account is credited by P&L account. So that is 200. So here it is balanced 200. Then in the last year, that is on 31st 12 2012, when interest is due for payment, then the entry will be interest account debit to Moped Limited. So to Moped Limited, so that is 100 rupees here. In the last year we have calculated in the hire purchase, so 100 here. So when this is transferred to the P&L account, that is on 31st 12 2012, then the entry will be profit and loss account debit to interest account. So interest account is credited by P&L account, that is 100 rupees. So 100 here. This is how interest account is prepared. Then similarly, we should prepare the depreciation account also. So depreciation is also a kind of expenditure to the hire purchaser here. So now let us go for preparing a depreciation. So depreciation account. So the same column sheet will continue, date here. So JF. So similarly, interest account here also, only 3 entries will come here. So particulars, JF rupees, date, particulars, JF rupees, credit here. So now, when the depreciation is allowed for the first year, that is on 31st/12/2010, then the entry will be depreciation account debit to vehicle account. So to vehicle account, first year depreciation here is 800. At the end of the first year, that is on 31st/12/2012, when this is transferred to P&L account, then the journal entry will be profit and loss account debit to depreciation account. So depreciation account is credited by P&L account. P&L account, so 800. So 800. Here also 800. When the depreciation is allowed for the second year, that is on 31st/12/2011, then the entry will be depreciation account debit to vehicle account. So to vehicle account, second year depreciation is 640 rupees. 640. So when this is transferred at the end of the second year, that is on 31st/12/2013, it is 10 here, it is 11 here, then entry will be profit and loss account debit to depreciation. So depreciation is credited by P&L account, so which comes to rupees 640. So 640. Then when the depreciation is allowed for the third year, that is on 31st/12/2012, then the entry will be depreciation account debit to vehicle account. So 512 rupees. This is the last year here. So 512. On 31st/12/2012, this is transferred to P&L account, then it will be profit and loss account debit to depreciation. So depreciation is credited by P&L account. That is 512 here. So 512. So there is no much difficulty in preparing the interest account and depreciation account here. So this is how the necessary ledger accounts are prepared in the books of hire purchaser. Thank you.